In 2018, trade between the U.S. and China totaled more than $730 billion. But as President Trump imposed tariffs on $400 billion of Chinese imports, trade between the two countries shrank 15% in 2019 after years of steady increases. Even after the U.S. and China signed the Phase 1 trade deal in January, the tariffs stayed in place. They will likely stay there until a Phase 2 deal is signed, which is looking increasingly unlikely in the short term. China still needs to buy about $130 billion of goods in the second half of this year in order to comply with their promise of purchasing an additional $200 billion by the end of 2021. Despite that bigger trade freeze, U.S. oil exports to China are set to reach record levels, and 84% of U.S. companies surveyed said that they have no plans to move production or supply chain operations out of China. As the trade war continues, U.S. companies made $14 billion in long-term investments in China last year, which means that a quick, full U.S.-China decoupling remains unlikely in the short term.